Hello, Imagine Better community. Today we are talking about property taxes. Now, I know that you just got a letter in the mail saying your house was worth more than you thought it was, and because of that, you're going to have to pay more in property taxes. Did it make you a little angry? Be honest. There's more to that history than you might think. Today we're going to talk about how our state property tax used to be a wealth tax, how we eliminated that state property tax, and how the state took over our local property taxes. It's going to be a wild ride. Let's go.
My name is Mac Latimer, and this is Imagine Better.
We're going to start our history in 1845, the year that Texas became a state. Back then, our property tax was a general property tax, or what today we call a wealth tax. It consisted of everything you owned, not just your real property. The Constitution of 1845 stated that taxation shall be equal and uniform throughout the state. All property in this state shall be taxed in proportion to its value, to be ascertained as directed by law, except such property as 2/3 of both houses of the legislature may think proper to exempt from taxation. Then the Texas legislature passed legislation outlining how we would value that property. It stated that each person should give a list of his property and its valuation, verified by oath, and that the unrendered property of non-residents should be assessed by the assessor at its cash valuation and no more. If you didn't catch that, that means that individuals were mostly valuing their own property at this point. From then until Texas's next constitution in 1876, property tax policy never stood still. Sometimes the county you lived in collected the taxes, sometimes the county the property was in collected the taxes, and sometimes the state collected the taxes. These three entities constantly fought over who would assess the value of the property, who would collect the taxes, and even who would receive the money from those taxes. The constant policy shifting never let the state even come close to collecting property taxes across its entire territory. And even in the place where they were collecting taxes, property was massively undervalued. With the new Reconstruction Constitution, the same constitution that we have today, Texas implemented a 50-cent property tax cap. Now that changed several times in the Constitution, but in 1923 it settled on a rate of 12.5 cents for the general property tax, 35 cents for the school property tax, and 7 cents for the Confederate pensions tax. The structures for assessing and collecting those property taxes went through several iterations. Texas created the state revenue agent, the state tax board, the state tax commissioner, boards of equalization, and the automatic tax rate board. They passed several laws trying to define the value of businesses, the value of intangible assets, and the value of land. However, with every improvement in property tax collections and assessments came a subsequent drop as people found ways around higher valuations. Then, during the Great Depression, the property tax delinquency rate rose to 20%. This is happening as the percent of revenue from property taxes decreased from 73.4% in 1915 to 18.3% in 1940. That decrease in the importance of the property tax, along with the complexity of collecting it, sparked several reforms in the 1930s, including allowing people to pay their property tax in 2 installments, having a homestead exemption, and giving a discount for paying your property tax early. Then in 1945, the state auditor found that only 7 counties in the entire state were correctly collecting their property tax. That, along with the decrease in percent of the budget, led to the elimination of the general revenue property tax in 1948, which took effect in 1951. By that year, the general fund property tax only funded 8.1% of the state budget. The state legislature followed that up in 1968 by eliminating the school portion of the property tax, and in 1979 by eliminating the Confederate pension portion of the property tax. And then in 1982, Texas amended its constitution to never again allow for a state property tax. So that's it, right? Then why do we still pay property taxes today? Today, when you pay your property taxes, you are paying your local property taxes. And that history starts where the last one ended. In 1973, in a case called San Antonio ISD versus Rodriguez, the Supreme Court pointed out the massive inequalities in our local property tax system. See, the counties had all of the problems that the state had with collecting property tax, with none of the resources to fix them. Not that the state ever did fix its property tax problems with its resources. On top of that, there were now 254 different incompatible systems of collecting property taxes. So in the 1970s, Representative Wayne Pavetto of Orange, Texas, was advocating for standardization and property tax reform. And in 1979, he passed that bill known as the Pavetto Bill. Now, first and foremost, the bill limited the property tax to real property and created what we think of today as a property tax. Then it separated the assessing and collecting functions, creating county-wide central appraisal districts. Today, for Bell County, that's BellCAD. These CADs existed so that each property had one valuation and not a separate valuation from each taxing entity. They also were required to reassess property value once every 3 years. The bill also created the State Property Tax Board to oversee the CADs, but that was then later given to the Comptroller's Office. The state set limits to property tax rates, increases, and exemptions, and essentially funded local government through property tax that those local governments could only control a couple variables of. Since then, the property tax system has undergone several little changes, but nothing really revolutionary. So let's dive into what our system looks like today. Let's start with the Central Appraisal District. What is it and how does it work? Now, the CAD has a new structure that's taking place on January 1st, 2025, so that's what we're going to focus on. The new CAD will consist of 9 board members. 1 will be the county tax assessor collector. He won't be able to vote. 5 will be voted on by the various taxing entities in that county, and then 3 will be elected by the people. Now stay calm here because the CAD actually only has 3 powers, and that is to hire, fire, and set the budget of the chief assessor. On January 1st, the legislature charges them with assessing the value of every piece of property in the county. The chief assessor will then send out initial property valuations by April 1st or May 1st for non-homesteads so that they have the time to protest their valuations by May 15th. Now we get into the protest process. Your protest will go to an entity called the Appraisal Review Board. This board is appointed by the administrative district judge to hear your case and the chief appraiser's case on the valuation. They will start cases around May 1st and end cases around July 20th. But suppose you still aren't satisfied with that valuation. You still have several options to appeal, including limited binding arbitration, regular binding arbitration, the district court, or the State Office of Administrative Hearings. Don't worry, I'm not going through all those processes. At that point, you're almost definitely paying a lawyer more than you're going to save in property taxes, and they can explain it to you. Now, this appeals process mainly ends on July 25th, when the CAD delivers the certified property tax rolls to each taxing entity, and that's where the fun begins. Then, they start the process of setting their tax rates. First, they must calculate 2 rates. The first is the no new revenue rate, which, while the calculations can be complicated, essentially would bring in the same amount of money from the properties that existed the year before. The second is the voter approved rate. Now, this is a rate that is statutorily defined, usually around 8%, that if the entity goes over that, they must get voter approval. The legislature set most of these rates in the 1970s, which means they're pretty high due to the inflation of the era. Once these entities find those 2 rates, they will create their budget, set their rates, usually somewhere between the 2 rates that we just talked about, hold 2 public hearings about those rates, and then pass those rates. All taxing entities have to set their rates by October 1st, when you and I will enjoy paying those taxes, and then it all starts over again on January 1st. So what are the problems with this system? There are so many, but we're just going to highlight 3 here. The first is obvious. Even with nearly 200 years of reform, the system is insanely complicated and expensive. Compared with a sales tax or an income tax, it's not even close. The complexity comes from the difficulty with estimating real property value. Sure, if you live in a neighborhood of 100 houses that look just like yours, it's pretty easy to get a pretty close estimate. But beyond that, it gets pretty difficult. How do you know how much the market will value that new porch you put in? How do you value trendy designs? How do you value a commercial property that you leased out to an overperforming company? How do you value a commercial property that you leased out as a meeting space for a larger, more remote company? Texas's property valuation system is probably the best in the country and has a robust protest system. But with wealth taxes and property taxes, things will always be complicated and at least a little bit subjective. The second issue is the morality and fairness of the system. A real property tax is a tax on a necessity. Unless you are homeless, you are either indirectly or directly paying the property tax. Being a tax on a necessity means it's a regressive tax, which means that people who make less money generally feel the weight of the tax more than those making more money, even if they aren't directly taxed. And wealthier people have a greater means to challenge incorrect property valuations than poorer people do. The third problem is a problem with all wealth taxes, and that's that it discourages wealth accumulation. Property taxes discourage people from building wealth through owning property. If someone bought a house that massively increased in its valuation, where they could still pay the mortgage but couldn't afford the taxes, they would have no remedy except to sell that house to pay those taxes. So, how do we solve this? Texas has gotten rid of property taxes before and can do it again. In the 20th century, Texas restrained spending and brought property taxes from 74% of state revenue down to 8% of state revenue. We can do that again. Instead of occasionally buying down property taxes, Texas should send more and more of the state's sales tax to local governments. As you send more of this sales tax to local governments, include sales tax in the no new revenue rate calculation. Then calculate the total approval rate as total revenue plus population and inflation. So if local governments want to increase spending per capita, they have to ask you. These steps would reduce the amount of property tax you paid every year until sales tax revenue completely replaced them. Now, depending on your assumptions, this would occur between 10 and 20 years from now, making Texas the only state without a property tax. Talk about an engine for economic growth. So, what do you think? Is eliminating property taxes too far? Let me know in the comments. If you made it to the end, thank you so much, and here is how you can help us. First, you can click the like button and the subscription and notification buttons if you're on YouTube. Then you can go into the show notes of this video and follow Imagine Better Media on all of the social media that you use regularly. After that, please share us with as many people as you know, in person and online. And finally, go to imaginebettermedia.com and sign up for one of our subscriptions. Thank you to our VIP subscribers who help make these videos possible. Let's imagine better and make it happen. And while you're here, you can click here to check out our other stories.